Good morning everybody and welcome to this SmartCharts European session on Friday the 13th of December. Hope you're all well. So let's dive in. So we've had a really big week of economic data. 4 different central banks announced an interest rate announcement, and we got a surprise from the Swiss National Bank with a bigger than expected interest rate cut, and that caused a massive move in the Swiss to the downside. But a trend hasn't yet been created because that was opposite to the direction it had been going in the past. And that's why we look at news announcements, okay, risk management, just to make sure that, look, when you are trading a trend, when there is a big theme in the market, you can tend to find that a lot of your positions, a lot of your activity may be concentrated on that one currency because that's the one that's moving, okay, it's one that's trending, it's one that everyone is trading. So when it comes into a high impact news announcement, we need to be a bit mindful just to make sure we're not overexposed to that currency, and if it's a surprise, market goes the other way, that you're not getting hit on all of your trades and taking a much bigger loss in a much shorter period of time. So we always need to protect account capital and mental capital, okay? And so the other announcements were just as expected, no real changes, so we were just back to trading market flows, okay? Today we have the UK GDP announcement, and that stands for Gross Domestic Product, and it basically shows a country's income, okay? It's the value of all the goods and services produced by an economy. Now the market is expecting a rise from the previous month, which was a negative minus 0.1%. The market is expecting a rise of 0.1%. Now I think this one will be quite interesting because in October it was a 0.2%, okay, then November's report was a minus 0.1%. If December's report, if it comes in negative, okay, and worse than people are expecting, and there's 3 months of contraction of negative GDP data, which is a technical recession. So this could be quite interesting for the British pound, okay? So that, let's see how that unfolds and if there's any trading opportunities around it. And the pound has been a little bit mixed, okay? We've had some long-term downtrends in the pound, but we've had some big rallies, okay, over the past several weeks or so, where a lot of them have come to the end of a trend, or some of them have just really long phase twos. So like pound US, pound yen, really big phase twos, but we've had uptrends in like pound dollars, pound CAD. But that's because the commodity currencies have been the weakest, so everything has been really going up against those commodity currencies, okay? So we'll keep an eye out on the British pound, see if there's any opportunities around that, okay? I'll do my best to update you in these daily webinars, but make sure you're tuning into all the other intraday trading webinars as well, interacting with all the other live traders to help you identify and participate in different trading opportunities as well, okay? For now, let's get an update inside the smart charts and let's see what's been going on from the technical analysis side. Okay, so if we look at the tools tab here, so again, pretty similar to what we have been seeing this week so far. You know, we have weakness in the commodity currencies. You can see Canadian dollar, New Zealand dollar, Aussie still relatively weak. Of course, Canadian dollar since the news announcement, okay, the Bank of Canada interest rate cut, which was the 5th consecutive interest rate cut. We're seeing weakness in the Canadian dollar, of course, the Swiss franc as well from the interest rate cut from the Swiss National Bank. And so we'll be looking for continued weakness in the commodity currencies, and we still have a bit of strength in the US dollar, a little bit of strength in the Japanese yen compared to the others. We look at the currency strength index because if you're like an intraday trader, like a fast time frame trader, you're trading currency pairs, okay? So really, you want to be buying the strong ones and selling the weak ones, all right? And then pairing them together in the exchange rates, because they act like a seesaw. When one currency is rising, the other one is falling, and vice versa. So again, you know how exchange rates work on your day one of your trading certification workshop, okay? And so for medium to higher time frame traders, then you may be looking for reversal opportunities, all right? Because what is strong, what is weak, at some point the trends will come to an end. You might get some profit taking, phase twos or trend reversals. So again, we keep an alternate on those as well, especially if those really strong, really weak currency pairs are coming into really strong levels of, you know, support and resistance on the chart, all right? And this is why, actually, if you go to your charts tab and look at the 180 phase changer strategy, Canadian yen has been highlighted from the London and Sydney trading floors as one that's quite interesting. So first of all, your 180 phase change strategy. Love the 180 phase change strategy. It's one of the 5 strategies we go through in trade certification workshop, and it's great to be able to identify momentum-based trends developing in the market. All right, utilizing moving averages and relative price patterns like ring highs and ring lows, and of course we want to be using what SmartCharts is finding and lining that up with a bit of human insight pattern recognition as well. So the combination of those things, which are very powerful. So what we have here on Canadian yen is that this is the first time we're in this what we call moving average zone. Okay, so the moving average zone is basically being on your yellow line, on your blue line, or anywhere in between that. Consider that to be the moving average zone. Okay, now I like to use moving averages. I like to trade in the moving average zone. Not everyone does, and that's completely fine. Why do I like to trade in the zone? Well, it just gives me a focus, right? I can say that, okay, look, I'm in the moving average zone, so did buyers turn up here before? Okay, yes they did. All right, maybe they can turn up here again, and maybe they can turn up here again, and maybe they can turn up here again until they stop turning up. All right, so what it does is it gives me a focus. I can say, okay, look, buyers have been turning up before, or actually on a downtrend, look, sellers have been turning up here before, then maybe they can turn up here again. You know, it gives me an area to focus on, that I can say that buyers and sellers turned up here before. But again, at some point, price will break through the moving average zone, of course. Okay, and then this is why we also look for other clues, okay, to stack in our favor. And that's why CAGN is quite interesting, because what do we notice? Well, you can see pretty much this this up move, okay, really started over here, didn't it? Right, that was like really the start of this trend. Okay, once we had 2 clear phase 1 cycles, and what's happened, we've gotten below that price level, haven't we? And now we're on the other side of it. So this becomes quite interesting. Has this support level, now that price is broken through, will it turn into a resistance level? Okay, so what we have, what we call a support and resistance switchover. Now, we've also just had a double top pattern, so you can see this up move here ended with this double top pattern, and price has also broken that low point here as well. Okay, so it'll be interesting to see if this is an area where sellers might decide to continue a trend. All right. So you can put in other clues and other indicators if you want to as well. So some traders will, you know, add on indicators. You can do that very easy in SmartCharts. You can indicators tab. There's lots of different indicators here you can add on. People might add on some stochastic oscillators, and they'll be like, okay, well, look, you've got some continuation divergence, right? You know, this previous swing high point to where you are now, you can actually see the stochastic is a little bit higher, what is known as continuation divergence, hidden divergence, telling you the market is more overbought here than it was here, but we're actually lower in price. You know, it's more of a bearish sign. Okay, so the opposite of that would be, let's say here, you can see that this stochastic has gone lower, but price has actually stayed higher. Okay, so this is more oversold here than where it is here, but it's actually higher in price, so it's like a bullish sign. All right, so you add on other clues if you want to as well, but in your trade certification workshop, your 3 days, your first 3 days, you stick to the basic systems as they are, just to really get comfortable with analyzing price, listening to the market, settling into a routine, setting in the plan, do your back testing to get that belief and confidence and following the plan. That's the focus first of all, and then yes, you might add in other tools and other things to keep an eye on if you want to as well. That's fine. But on top of helping you to identify potential opportunities, SmartCharts will also help the risk management side. If you get the down icon here, we'll populate an entry price of the blue dot, stop us on the red dot, target the green dot, do all the risk and portfolio management calculations for you, and it's really important to keep that risk low. Okay, make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. Now, because we are on the first time we're on the moving average, right? So we haven't confirmed we bounced off the moving average. We know we have done so in the past, but right now, since it's coming below the moving average, is the first time we're on it. Okay, so it's a lower probability setup than being on the second time you're on the moving average, right? Because we're assuming sellers will turn up here, but we've got other reasons why sellers could turn up here, the horizontal resistance line. But you need to make sure the reward to risk is better than a one-to-one reward to risk. One-to-one reward to risk is okay when you're in a strong trend, okay? Because you've got the higher momentum to get the higher win rate. But if you're not in that strong trend and you're trading more of a positional trade, all right, then you need to make sure the risk reward stacks up from a probabilistic perspective. So then in this instance, we can see that, look, if sellers did turn up here and make a lower low cycle and continue a trend, then maybe they can get somewhere down to this low point here, okay, as a next sort of target area. So then we can squeeze out a little bit more reward to risk, and you can see Smart Charts will already recalculate the position size, and that just puts it just slightly above a 2-to-1 reward to risk there, okay. And then Smart Charts will already recalculate everything for us, great. And then we can set an expiry. I like to set a current bar close expiry on this strategy and time frame, and decline or exit the trade at the bottom. And what that means is if sellers don't turn up by the end of this daily bar, then and go to the entry level, this would expire, didn't win, didn't lose, it didn't cost anything. But if they did decide to turn up, that would trigger into a live open trade. Then either it will get to your target level or the stop loss level. So either it's a winning trade or a losing trade, okay? All right. That's it from me, okay? I'm going to wish you all the best with your trading. Have a good trading day, especially if you're tuning into all the other live trading webinars happening throughout the day. But have a fantastic weekend, and we'll be back next week for another week of trading the financial markets. Bye for now.